Hello, everybody. It is midweek update time. Joey here. It's October 12th, 2022. Moving through October. A quick note, I do believe earnings season starts to pick up here, maybe the end of this week and early next week. That's something to look forward to. But today is going to be pretty much a nothing day because we are looking for a CPI number that I believe the market's going to react to. I've got my 2 cents. I'm going to share it with you guys. Just take responsibility for the outcome. You get it. So what do I mean? Well, the market pretty much gave up everything that it had in that rally. Now, that rally was pretty aggressive. It bounced up to a resistance area, and it just didn't stay there very long. It fell apart pretty much before it got to the end of the week. Friday gave up, I'd say 3/4 of it. And then Monday and Tuesday were right back to those lows. But I truly think the last day or so we were hovering around this area, the support level, because of a CPI number. Now, yesterday, folks, we had a pretty good rally off of the bottom, but we gave up all the gains and closed flat. We're doing kind of that similar move here. I don't know about moving up or down yet, but we're just kind of moving sideways because I do believe that CPI number is going to carry a lot of weight. We did have, I'm just going to go ahead and skip down to our economic data, our wholesale price numbers, or the PPI. The production price index came in a lot hotter than expected, so its inflation is a factor for the consumer, at least in the manufacturing part of it. The consumer, which is going to be the big number tomorrow, and another one that I'm going to highlight too, folks, I'll get to it again, is the retail sales. I know retail sales isn't that big of a deal, but it just shows the activity of the consumer, and until we can slow down, I don't think the CPI number is going to go south at any time soon. So, now there are some trades out there that are pretty decent, both bull side and down. The cool thing is these neutral trades, coin and ETSY, have been up for weeks now. Strength is still where you find it. LNG, Schlumberger, that was on our last week and 2 weeks ago. Geez, Schlumberger went all the way back to the, what I have it written down here, the 21st, I believe, of September, and it's still pretty good. Pair trades, Match, Meta, ALNY, VMware, GameStop I thought was cool. Raised its head yesterday with Corey, and I agree with it as well because it looks like it wants to break down. So let's jump into some of these charts that I like. This is LNG. It's a nice little pullback one day. It's holding up to that rising 20-day moving average, and I just think that it's going to kind of base here. Now, if the overall markets start to really fall apart, then yeah, I mean, it could come off of this peak and it could fall with the rest of the markets. But what I like about it is it's just hanging on. I'm going to get a better pin than this, but it could be creating an ascending triangle pattern. What I like about the situation it's in now is because we can be patient with it. I don't need to get into this today as a bull pullback. I can wait for this to move all the way up to the 175. If there is indeed a flight to energy or worried about an economic slowdown or some sort of defensive surge, we'll see it as it gets up to the 175 level and maybe even breaks out. So you can be patient with this. Wait for it to do the ascending triangle breakout pattern before you go ahead and buy it. That's where I'm sitting because I am definitely, well, it's obvious, I'm definitely on the bear side, shorter term and longer term. So let's move over to SLB. Schlumberger here. He looks really good. I like the fact that he broke out and he's now consolidating at a certain level. So you could play something sideways to up on this. Maybe a diagonal spread. Things of that nature. It depends on how long you want to be in it. I'm not sure if I want to be in anything bear or bullish for too long, but this would be the right sector. Nice little breakout here as it had its little ascending triangle. Popped out end of last week after that big surge to the downside for the rest of the market. So a flight to safety for sure. It looks like it might just consolidate here around the 42 level, maybe start to bleed towards the 44. So diagonal spread is where I'd go with this, or a shorter term vertical spread. You could try to play a credit above that line I drew, maybe just above the 40 to be a little bit more reserved, but it might be something to play sideways to up. All right, let's move on to the sideways stuff. I liked coin. Coin has just been excellent. And for something as volatile as crypto, this just does really well. I'll draw all the way back here to this 80 line. That's a resistance, and it really liked to park itself in that 60 mode. And this is all the way back here in May, is after this huge slide that it had and how volatile it's been. It just seems to kind of be comfortable in between that 60-80 mark. It's $20. I say that every time I talk about it, but I like to remind you guys of it. It looks like it's getting tighter. Now, On the other side of the coin, no pun intended, we do have a symmetrical triangle in the shorter term. Actually, I could carry this all the way back to July and draw that. So we could be pinching if you guys wanted to play a breakout to one side or the other. Now, it's tough because it's in between its moving averages, right? It's in between this 50-day moving average here and the 20-day, which are backwards, right? The 20 is below the 50. So does it break to the upside or to the downside? Let's see what happens with its earnings. Let's see what happens with activity. Cryptocurrency is already losing its popularity. Geez, can I dare say that? Whatever. And anyways, I think there's a lot of traders out there that are aware of it. It's volatile. It's risky. But it could be losing its luster. And what I mean by that is just not as active as it was back in the day. Now, that could hurt this because this is a transactionary company for Coinvoice-specific cryptos, right? So if its numbers come out bad, I could see this gap down and maybe even break that 60 level and revisit this 50 area and continue further down. So we could play this as a earnings play. And if I had to guess, it would probably be to the downside. Yeah, see, geez, I'm too pessimistic, right? Let's go to ETSY. Now, Etsy, I believe I put on the bull for a while, and then it slipped back to neutral, and then I think it's been on the bull and slipped back to neutral, or I should say bear. And the reason being is because we have this area that I like to see it consolidate at, and I think up in here I thought, hey, this could be bullish. We get a breakout at 115. Obviously back in this area, okay, we broke below the 105 mark, the 103 if you want to call it, so I was bearish, but it has come back. So we're back into the sideways between that 105, 115, or what's this line I drew here, which we call 103, 102 and a half maybe, 115 area. So good on the sideways side. Now that's if you guys are happy absorbing the volatility of what these markets have given us and expect kind of a no event, maybe a head fake flush out to the downside and then come right back up into the respective range of the SPY. I'll draw that chart when we get there here in a second. So match, this was from last week. Beautiful bear rally. We talked about it coming up and touching that 20-day moving average, and it did exactly that. Awesome job. Once again, class, great work. And it came back, and it's right back down to the target of 46. Right there. There's not much more to say to it. Now, moving on. If you guys believe we're not going to make it through the CPI number, the markets start to flush out. This will be one that will follow suit and just break right down. Every time I bring this up, I always talk about how it's nice, how it stages and breaks and stages and breaks, stages and breaks, and it's about ready to do it again. So, good one to have on the watch list, good one to play on the bear side if we get a turn down in the markets here the next day or so. VMware, same thing. It is a tech. It is in the right place. Everything looks good. It is playing with its lows, and it looks like it wants to bleed lower. Hesitating today. I truly believe this one's waiting for the CPI number. It's in a very tough sector to actually come out ahead, especially when it gets through its earnings. So nice little breakdown there. GameStop. Now this is a meme. This is a Reddit. This can be manipulated, and it can be talked about, and it can jump out of nowhere and go crazy. Keep that in mind. But if you wanted to play this on top of technically, it's got a great argument of continuing to break down once it gets through its earnings. So descending triangle pattern is what I'm looking in the short term. $25 breakdown with a short-term target back here that it hit in mid-May of $20. It's an easy bang, $5. I will be more than comfortable carrying it through its earnings. This would be something that I would do with a vertical spread, because if I do get caught in a little Reddit meme and it shoots up to $45, that's okay. I'll just eat whatever my max gain, max loss was on this. This would be an out of the money if you were to put this on and carry it through, doing the 25-20 bear put spread. So they're both out of the money. It should be a good risk reward. All right, just thought you'd be interested in that. Let's get into our market analysis, because these markets aren't really giving us anything but bear. I don't know what else to do. Now, let's go over here to the returns so far this week, Monday, Tuesday, Wednesday. It's flat. The Q's down almost 2%. Oil gave up quite a bit. Now, this thing was up 10% last week. This time, now it's down giving up about half of that. We are back into the high 80s. We were 92, and I think we're in 87-ish right now, a barrel of oil. So the USO index is going to be lower as well. Gold dropped another 1.5%. So it's a little bit of a carryover from what we saw at the beginning of the week, but it's flat. We're sitting right at the levels. Let's go ahead and take a look at the charts. And this is probably the best example of just sitting and waiting for some sort of a reason to dump. So here we are back down after our really cool little cup and handle, a really quick handle, steep handle, and we're just poised. Now this isn't optimistic. If it was optimistic, I think we'd still be hanging up around this 380 level, but we're not. We gave that all up really quickly, and we're waiting on a CPI number. We've already seen a couple of things that came out a little hot. That PPI is pretty much telling us the CPI is going to be high. I don't know how we don't get out of a number that's higher than what's expected. So we'll see. But yeah, glass is definitely half empty. We could see that it's going to break down. It's going to be pretty difficult to target. So what you guys want to do is maybe zoom out, take a snapshot of where we were. Boy, I think February of 2020. We back to those lows. Or if you guys want to take into consideration this most recent peak here, we could snap Fibos on it. It's Fibonacci retracements, do some extensions. Your guess is as good as mine. Yes, folks, it's going to be more of an educated, artistic guess than a technical target to the downside, especially with the volatility built into these markets. It could get pretty aggressive pretty fast. Diamonds are a little bit better. They are still below lows set in June, but it is above the pivot that we set here at the end of September. Same idea. Just kind of take it for where it is. I'll bust through this pretty quick. Qs, on the other hand, aren't faring so well. We already had AMD come out and say they lowered their projections for next quarter by $1 billion. I don't think anybody's going to get past that. I think it's going to be one after the next, after the next, after the next. So we're already starting to see some bleeding in some of those high flyers or some of the technology sector. So, all right, last chart. Hey, check it out. I thought I'd pop up a VIX. The VIX is kind of interesting. I can't really zoom in on it using Finviz, but I like to use Finviz charts just so everything looks clean. But it is actually poised for a breakout. This is a really incredible ascending triangle pattern. It had its pullback, and we'll see if we do indeed that pop. I talked about this on Monday, and I was thinking high 30s, low 40s. If we win, we get our capitulation. And this number could be the first push into it. We get into earnings season, we might see a slow bleed, and this number might creep up toward this area. Not a straight up shot, but creep up. And if that happens, then we're in for a lot more bearishness for a lot longer of a time period. All right. So those are kind of the two things that I'm looking at when it comes to how these markets are going to react to not only this number, but actually going into earnings. So let's take a look at the economic data. The first one's pretty obvious, and it is a little bit lighter, what it has been, which is this PPI. I'll go ahead and underline it. Drop of 0.2%, expected to bounce a little bit, and it doubled it. That's big. So this kind of has to carry over. One thing that kind of caught my eye that I might have overlooked, folks, this FOMC minutes today, if we get the Fed that comes out and starts to talk about stuff, create, or at least I should say start some volatility. So keep that in mind. We might see some volatility towards the close of the day and maybe get a move before tomorrow's announcement. So let's move on to tomorrow's announcement. You can see there it is with the CPI. We got the CPI here. We got the core. We got year over year, all sorts of different numbers. But I do believe the one is going to just be your standard here. The core takes out energy, and this will be a little bit more smooth. So that's the one I'm going to be looking at, is how far off we're off of this 0.3% number. Another thing that if we get a head fake reaction, let's say we go down and then we go back up, or we go up and we go back down, we can't exclude this retail sales, because if the Fed comes out and says in the Fed minutes today, hey, we know that the CPI is going to be higher because the PPI is higher. We just wanted to see how active the consumer is. If the consumer is still active, and a good gauge of that is the retail sales, then we know that those numbers aren't going to come down anytime soon. So there's actually a few things to look at today, tomorrow, and into Friday. But if the momentum takes it, if the momentum starts to really go and we see a spike in that VIX, None of these are going to matter. Share the poll here. And as you might have guessed, definitely -2, -3, somewhere around there. 50% -1, 64% -2. Got a couple people up the +2, +1s, maybe getting an oversold bounce. I could see other ones, but we were predominantly on the bear side. All right, guys, thank you so much. I'll hide that, put it away, and I'm going to join you, right? So my overall monthly outlook is definitely on the -3 side. I don't see how we get through tomorrow's number without some sort of a hiccup, or if we do and have a little bit of a rally, I just don't believe in it. And my weekly outlook is -2, some sort of a knee jerk or a head fake to the downside. I could actually see that again, a little bit of a head fake. And what's interesting is we saw it last time. Look at this little head fake that we had last news. Breaks down, head fake, and then we had that rally. We're right back down to that exact same level, folks. So could we get a bad announcement? Everybody's scared the Fed's going to go. We get the candle like this, and then we start to climb back. I'm completely for that as well. That could happen. However, in the long term, it's no different than this. It is just another bear rally. The Fed's still keeping the hammer down. Inflation is still in our face. Nothing's going to change, and then we get into an earnings season. So I'm going to be reluctant for anything that goes to the upside or ready to at least short it. Let's get into our sector analysis. Now, sector-wise, everything is definitely red. Consumer defensive, flight to safety here in the last little bit, and then technology continues to sell off. This is once again from Wednesday to Wednesday. This isn't Monday, Tuesday, Wednesday. This is the full week. So everything's down. Energy 2.86%. Technology got smeared. I truly think that has a lot to do with AMD and the sympathy, because that was indeed last week. So that could just be a carryover. Real estate, obvious reasons, financials, things of that nature. But let's jump into the consumer defensive, because this is just a bear rally. This is kind of what I'm looking for in the overall markets. I'm a little bit worried about. I shouldn't say worried. I'm a little bit reluctant to get bullish in anything. So it is moving higher. You could see. Let me get a line, because it's kind of at its resistance area. We'll see if it'll play itself out. Consumer staples, consumer defensive. We just got a production price number, knowing that the producers are paying more and raising prices. The consumer's still consuming. Well, if it's still active, you might as well put some money in it, right? So the consumer staples are having a little bit of a bounce. Now on the bear side, it's technology. Gosh, I feel like a broken record. Each week we've been talking about the same stuff. I like to see the consistency of the markets. That does make me happy. A breakdown in the technology sector. You can see it broke below the 120 for you ETF traders out there. I've got a lot of traders that don't like specific news and earnings on stocks, so they trade these. Looks great. So it's breaking down. Looks like it's hesitating at this level. We'll see where it goes from here. All right, so that's about it. Let's do a quick conclusion. So tomorrow's CPI number will create our next move, period. The markets are poised for a bearish breakdown. We've got that cup and handle. The last rally failed miserably and quickly. We're down at levels. It's, hey, tell me something I don't know, right? So if I've got to go into a coma and pick a direction, it's definitely going to be the bear side. Now, even with a bullish response, it should be treated as another bear rally. There could be another squeeze of shorts. Short squeezes are very healthy for bearish markets. That's why you get these huge moves up. So don't be surprised if we get a big flush down this afternoon because of the Fed minutes, or right after the CPI comes out, we get a huge flush down and then a gap down even on that would be Friday, and then a huge move back up. So that can squeeze. So if you do like the bear side, you believe in the longevity of it, do something that you can absorb a short squeeze or a short rally if we do get that bullish response. Sentiment, flat out bearish. I don't know how else to spin it. Economic data, we're not seeing much slowing in the numbers outside of housing. So the only thing that I'm seeing slowing is new home sales and new home contracts and some building stuff, mostly in the housing. Other than that, folks, we're not seeing too big of a slowdown in new jobs. We're not seeing an increase in unemployment. We'll see what that retail sales number is on Friday. We're not even seeing a sideways number in CPI or PPI. It's still going up, right? So there is an argument that the Fed needs to stay on their pace. Okay, that's enough. Let's go out and take a look at some trades you have. I'm not seeing too many, which is fine. It's a tough day to trade, but there are one or two, so let's take a look at them. Well, first, I got to get rid of this. All right, cool. Now, let me open this back up and make sure that we're still rolling. All right, jumping into the markets. Let's start. James has RNG. Let's take a look at Ring. Man, sorry, I giggle every time when I got this snapshot. Look at that. This just the beginning of this year. Ring was a $260 share stock. Now it's at $30. You know what the sad thing is, folks? It can go substantially lower. So, had October 21, 40-35 vertical spread. Wonderful. Wonderful. Took profits this morning. Okay, that's fine, James. Now keep in mind, you had the October 21st, so you probably left some on the table there. It's only a week and a half. That's okay. 80%, so I could avoid the CPI. Still on a watch list. That's fine. That's okay. Now, a lot of traders like to get out of stuff before massive volatile announcements, the CPI or actions or whatever events we'll call it. I'm fine with that. I'm totally fine with that, James. James and I, we've talked many, many times, and he is that guy. Bird in the hand, why risk it? It's in his plan. It's how he rolls. So, totally fine. I do like it here, though. I like it as this low base. I imagine you get kind of a boy, this could actually slip lower, but it does feel a little extended from 40 down to 35, so I get it. But yes, keep it on the watch list. Let's put it down on our watch list as well. Be interesting to see, but I like the play and the decision. Thanks, James, for sharing. That's cool. All right. Moving on. There's my comments. Thanks for those, by the way, guys. Okay, previously looked at BLK to the downside, but didn't get filled at my price. Looks like it may be making a new run lower, but it is too extended here. We'll be watching it tomorrow. Let's take a look at it. Okay. Zoom in a little bit and see how extended it is. Yes, it does feel a little extended, but I do like, let me move this up a little. I do like how it did come off of a little bit of a rally. Boy, that rally last week was really nice. And it is breaking down. Sure, that's something that I'd be okay with. And just like some of these things that we've been talking about, I'm okay throwing darts at stuff. Like with GameStop, I'm okay throwing on a vertical spread out of the money with GameStop. I'm going to have high reward, low risk. If it flies up, who cares? But if it falls apart, that's great. I'm okay flipping a coin over this announcement and what the markets could do for the rest of the week and into next. I'm fine with that. So if this is one that you're okay with, now this is a higher price stock. It might be a little bit more painful if it goes the wrong way, but you could always play something with a max risk built into it. Targeted butterflies might be pretty cool here, right? So I'm okay with that. Let me take a look at. I'll put it down on the bear watch, and then you can just investigate a little further. Okay, but it has two extensions. Okay, we'll be watching. It has earnings tomorrow, does it? Is that correct? I think, let me see. Sometimes they post it here. Yes, okay, so an earnings play. Why don't you do an earnings play on a targeted butterfly? Now, folks, what I love to do with these is go to the volatility for the month, or the week. Right? If it's got earnings tomorrow, you might want to just do it for the week. Find out what the plus minus is for the end of the week and target it. So if it says, hey, it's going to drop 30 bucks, then you just target a butterfly at 500 and open it up accordingly. 510, 500, 490. If you want to play tight, you can open up wider and just flip that coin. Might be kind of fun. Something to look at. Thanks, Dan. All right, moving on. We got HRB. Okay, let me zoom in on this. And November 40, October 36 diagonal put. So November 40, right here, October 36. There it is. Okay, nice. Going to play some consolidation there. Maybe it'll drop down to the 36. That makes sense. Until then, you're in the money on that 40, and that 36 can bleed away. Cool. HRB. I'll put a little sideways on that too because you're diagonalizing it. But I do like that. It's a good trade. Good trade. Looks like you probably just regular expiration, right? Monthlies. So that's why you went November, October. That's great. That's fine. It's wide enough. It looks like it's wide enough. Okay, cool. Thanks for that, Sebastian. That's a good one. HRB. Let me put it down. Oh, I already did. Okay, Joel's looking at TT. All right. And this is let me read what he's talking about here. 145, 140 bear put for next Friday. Okay, yeah, there you go. Similar to what I was thinking about with GameStop. It's targeted. It's a little aggressive. We're going to go ahead and just assume the bear side on this. It's going to break down. I like the 140 as a target. It's a previous support level. Good. Cool. And if it doesn't turn around, it goes straight up. That's a good risk reward on that one. Bear put for next Friday, so a week and a half from today. Good time frame. Pretty cool. And then if the markets do roll over and this thing starts to go to 135 and 140, yeah, you just let it go, let it expire, and take max gain on that. Thanks, Joel. Let's go ahead and type up some of these trades. All bears, not surprising. Good ones. I like them. So RNG, BLK. You guys will see these in a second. HRB has a sideways to it, and TT. Okay. So here's our list, and it's a short list. I'm going to be focusing a lot more on what the markets do. I have talked to a few of you, and don't be afraid to trade the spiders, the SPY or the diamonds, the Qs. They're actually pretty good setups. They have a lot of options to choose from, things of that nature. So if you want to play maybe the Fed minutes today or that CPI number tomorrow, I'm totally fine with that. But it is going to be a little bit of a coin flip. I do think it's going to be kind of like a Fed policy announcement, the reaction. There's going to be push-pull. But if you do have to err, I'll say it again, I believe it's the bear side. Okay, fun day, fun class. Thanks, guys, for the participation as always. If you got any questions, you know where to find us, and we'll talk to you next time. Bye, folks.